Welcome to Briefings on Global Affairs and Geopolitics, as we continue to explore the changing geopolitical landscape in today's world. Our main focus this hour is on the BRICS de-dollarization push as Brazil's new president says BRICS should launch global currency as he highlights plan to boost business with China. Let's get started. The president of Brazil, Luiz Lula da Silva, has expressed his opinion that the group of 5 countries known collectively as BRICS ought to establish its own common currency in order to compete on the international scene. According to Nikkei, after attending the G7 meeting in Hiroshima, President Lula conducted a press conference where he extolled the virtues of a shared currency that is independent of the dollar and touted its potential benefits. The report quotes former Brazilian President Lula da Silva as saying that his country is working to strengthen its economic connections with China and hopes to create a common BRICS currency. These perspectives go counter to the objectives of the G7 nations, which are centered on de-risking without decoupling from China. Both of these phrases refer to the process of removing risks. These words were made by President Lula approximately 1 month after he had initially voiced his support for a BRICS currency. Why is it that a financial institution, such as the BRICS Bank, can't issue its own currency in order to facilitate trade between Brazil and China, as well as between Brazil and the other BRICS nations? After the end of the gold-to-dollar exchange rate, who made the decision that the dollar would be the currency used in trade? Depending on which country they represent, BRICS officials have presented a variety of perspectives regarding the possibility of a shared currency. At the end of the previous month, a senior lawmaker from Russia stated that BRICS is already in the process of developing an alternative currency that will circumvent the dollar. However, Naledi Pandor, the South African Minister of Foreign Affairs, stated not long ago that the introduction of a global BRICS currency is a matter we must discuss and discuss properly. According to VanEck, a global financial management firm, the price of Ethereum, ETH, may reach $51,000 in fewer than 7 years if certain conditions are met. VanEck lays out its base case, bear case, and bull case for the performance of Ethereum continuing forward into the latter part of this decade in a newly published research paper. VanEck elaborates on the process it uses to arrive at its estimates as follows. We base these estimates on the notion that Ethereum becomes the dominant open-source global settlement network that hosts considerable sections of the commercial activity of business sectors with the highest potential to gain from shifting their business activities to public blockchains. This network will host substantial portions of the commercial activity of company sectors that have the highest potential to gain from moving their business functions to public blockchains. We assume that we own a collection of call options in a portfolio of similar smart contract platforms, with the dominant platform expected to take a majority market share. According to VanEck, the price of ETH might plummet to as low as $343.29 by the year 2030 if the bearish scenario plays out, and it is assumed that Ethereum is no longer the leading settlement system or smart contract platform. Ethereum currently has just 15% market share. VanEck projects that the price of Ethereum will reach either the base case of $11,848.62 or the bull case of $51,006, depending on how well things go for Ethereum. The company believes that Ethereum is on its way to becoming a store of value asset, much like Bitcoin, but possibly in a somewhat different manner. This prediction was made by the company. Ether is becoming more than just a transactional currency or a consumable commodity like oil or natural gas, as we contend here, which brings us to our final point. Due to Ethereum's demonstrated mutability of code and an evolving social consensus focused on utility, we believe that ETH, while not a complete store of value like Bitcoin, will nonetheless become a store of value asset for state actors looking to maximize human capital, in contrast to Bitcoin, which maximizes for stranded energy. We're going to wrap things up here for the time being. Thanks for watching. See you in the next video.